A seismic shift is occurring in the broadcasting industry. Traditional television, once the titan of media, now grapples with a rapidly evolving landscape. The emergence of streaming services, the trend of cord cutting, and a surge in digital content consumption have conjured a perfect storm, compelling broadcasters to either adapt or face obscurity. In this tumultuous climate, Sinclair Broadcast Group, one of the largest television station owners in the United States, has announced a bold decision: the sale of nearly 30% of its stations. This move sends ripples across the industry, marking a potential turning point in the evolution of broadcasting. Sinclair's decision is not an isolated one. It mirrors a broader trend of consolidation and transformation within the media landscape. As viewers increasingly turn to streaming platforms and on-demand content, traditional broadcasters see a dip in both viewership and advertising revenue. To stay afloat, many are now seeking mergers, acquisitions, and strategic partnerships to consolidate their resources and extend their reach. This wave of consolidation raises critical questions about the future of broadcasting, especially concerning local news and independent media outlets. The implications of these shifts extend far beyond corporate boardrooms. They directly impact how viewers access information and entertainment, reshaping our media consumption habits. As the broadcasting industry navigates through this period of uncertainty, examining the forces at play and their potential consequences becomes crucial. Sinclair's downsizing is not just a strategic move. It serves as a compelling case study, offering insights into the challenges and opportunities that lie ahead for broadcasters in the digital age. This story is about more than just one company's strategy. It's a glimpse into the broader shifts occurring within the media ecosystem. Understanding the motivations behind this decision and its potential ramifications can provide valuable insights into the future of broadcasting and its impact on viewers, content creators, and the industry as a whole. As we delve deeper into this evolving landscape, we'll explore the factors driving change, the key players involved, and the potential outcomes that will shape the future of how we consume media. Sinclair Broadcast Group, a name synonymous with local television, has long held a commanding presence in the broadcasting industry. With a vast network of stations across the United States, Sinclair has been a pivotal player in delivering news and entertainment to millions of households. However, even giants like Sinclair are not immune to the winds of change sweeping through the media landscape. The company's decision to sell off a significant portion of its stations is a strategic maneuver aimed at adapting to the evolving realities of the broadcasting business. Several factors have contributed to Sinclair's decision to downsize. One of the most significant is the decline in traditional television viewership. As streaming services like Netflix, Hulu, and Disney Plus continue to gain popularity, a growing number of viewers are cutting the cord and opting for alternative forms of entertainment. This shift in viewing habits has led to a decrease in advertising revenue for traditional broadcasters, putting pressure on companies like Sinclair to find new ways to remain profitable. Another factor influencing Sinclair's move is the increasing competition within the broadcasting industry itself. The rise of digital media companies, coupled with the consolidation of existing media giants, has created a more crowded and competitive marketplace. To stay ahead of the curve, Sinclair is streamlining its operations and focusing on its most profitable assets. By selling off stations in smaller markets, the company can free up resources to invest in new technologies and content that will appeal to a wider audience. Sinclair's decision to downsize is a calculated risk, but one that reflects the company's understanding of the changing media landscape. By adapting to the new realities of the industry, Sinclair is positioning itself to remain a major player in the years to come. However, the company's move also raises questions about the future of local news and the impact of consolidation on media diversity. As we explore these issues in the following sections, we'll gain a deeper understanding of the stakes involved in Sinclair's big sell-off. Sinclair's downsizing is part of a larger trend of consolidation within the broadcasting industry. As media companies grapple with declining revenues and increased competition, many are turning to mergers and acquisitions as a way to survive. While consolidation can lead to greater efficiency and cost savings, it also raises concerns about the potential for reduced competition and a shrinking playing field for independent media outlets. One of the main concerns with media consolidation is the potential for monopolies or oligopolies to emerge, where a handful of companies control a disproportionate share of the market. This concentration of power can stifle innovation, limit consumer choice, and create an environment where diverse voices and perspectives are marginalized. As fewer companies control the airwaves, there is a risk that news and information will become more homogenized, reflecting the interests of a select few rather than the needs of a diverse audience. Moreover, consolidation can have a particularly detrimental impact on local news. As large media companies acquire smaller stations, they often centralize news-gathering operations and reduce local staffing. This can lead to a decline in the quality and quantity of local news coverage, depriving communities of vital information about local issues, events, and government activities. In an era of increasing misinformation and polarization, access to reliable local news is more important than ever. The trend of media consolidation raises fundamental questions about the role of media in a democratic society. A healthy media ecosystem thrives on diversity of ownership, independence, and a commitment to serving the public interest. As the broadcasting industry continues to evolve, it's essential to consider the potential consequences of consolidation and to explore policies that promote competition, diversity, and a vibrant media landscape that reflects the needs of all citizens. While traditional broadcasters like Sinclair are adapting to a changing landscape, a new breed of media companies is rewriting the rules of the game. Digital platforms such as Netflix, Amazon Prime Video, Hulu, and Disney Plus have emerged as major players in the entertainment industry, attracting millions of subscribers worldwide with their vast libraries of on-demand content and original programming. These streaming giants are fundamentally changing how viewers consume media, challenging the established order and forcing traditional broadcasters to rethink their strategies. One of the key advantages of digital competitors is their flexibility and agility, unburdened by the infrastructure costs and regulatory constraints of traditional broadcasting. Streaming services can quickly adapt to changing consumer preferences, experiment with new formats, and deliver content directly to viewers through a variety of devices. This direct-to-consumer model allows streaming platforms to build strong relationships with their audiences, gathering valuable data about their viewing habits and preferences. Moreover, digital competitors have disrupted the traditional advertising model that has long sustained the broadcasting industry. Subscription-based streaming services generate revenue directly from their viewers, allowing them to invest heavily in content creation without relying on advertising dollars. This shift in the economic model of media has put significant pressure on traditional broadcasters, who are now forced to compete for both viewers and advertising revenue in an increasingly crowded marketplace. The rise of digital competitors has created both challenges and opportunities for the broadcasting industry. While traditional broadcasters face increased competition and declining revenues, they can also learn from the successes of streaming platforms, embracing new technologies, experimenting with new formats, and finding innovative ways to connect with viewers in the digital age. The future of broadcasting belongs to those who can adapt to the new rules of the game and find creative ways to thrive in a rapidly evolving media landscape.